QuickBooks Online 2025, the Vendor Center, which might also be called the Expenses Center, the Purchases Center, or possibly even the Pay Center. Get ready and some coffee because we're about to learn to save time with QuickBooks Online 2025. Here we are online in our browser, searching for that QuickBooks Online test drive, the free sample file available to everyone, looking for the result that has Intuit.com in the URL because Intuit is the owner of QuickBooks. You may have to then verify that you are not a robot, and then we should be in the free sample file for Craig's Design and Landscaping. We're going to open up the main financial statement reports, which will be our routine every time the report's on the left-hand side. We're in the Standard tab, Favorites. We're going to right-click on that balance sheet and open the link in a new tab. You can see it populating up top. Right-clicking on the P&L, the profit and loss, otherwise known as the income statement, opening it in a new tab. Then we'll tab to the right. I'm going to close up this hamburger, and then I'm going to tab to the right, close up the hamburger. So now we have the first tab being our data input and navigation tab. The second tab having our major financial statement report, the balance sheet. The third tab, the profit and loss or income statement. Let's go back to the first tab now. We've been thinking about the full accounting cycle, trying to break down the understanding of it into chunks so we can get a better understanding in bite-sized pieces of what's going on, and also because this is how you would break up the accounting system, whether you're working on it yourself or possibly working in a business and need to break up this accounting system into cycles, assigning tasks to different people. So we thought about the idea that the underlying items to set up, such as the chart of accounts, might be under the cog into the lists. But once we have done that, then we're going to do our day-to-day input process, which is what our major focus is on the first half of the course. The second half of the course, we'll go into those underlying setup items. So we can go into the plus button here and find the major data input forms, remembering that the term form is specific within QuickBooks. It doesn't mean that you're going to actually give the form necessarily to somebody like a vendor or a customer, but it just means that's the data input field which will be used to create the journal entry used to construct the financial statements, balance sheet, and income statement. Now you can see here that we have the customers, the vendors, and then in essence the payroll and the forms nice and neatly populated under them. That's basically our cycles. We've got the vendor cycle, which is our point of focus now, which you can think of as ultimately money going out. We're paying out to the vendors. Vendors in this terminology means the people that we're buying goods and services from, remembering that we could also be thought of as vendors because people are buying goods and services from us. But when we think about QuickBooks, we have to think about which side of the table is the term referring to. Vendors specifically refers to us, the person purchasing from a vendor. So money ultimately going out. We talked about the idea that if we're a small business, especially if we don't have inventory and whatnot, it might be a very easy system because you might be able to set up the bank feeds and pay for things such as the telephone, the utility, and so on with the bank feeds, recording just in essence an expense form, which is basically a type of check form without a check number. It's the form that decreases the checking account. However, if you have a more complex system, if you're trying to track the accounts payable because you want to pay them as late as possible, often the case for slightly larger businesses or businesses with larger dollar amounts where the cash flow becomes important for smaller time frames, like 15 days to pay the bill or something like that, then we're going to enter the bills. So that means you're going to spend all your time, if you're in the vendor cycle, if you're working in a company, tracking the bills, trying to pay the bills as late as possible. So that's what we want to do now. Now, that means that we're going to have to go into the center and find all the bills that we have entered, sort the bills by due date, and think about if we have any cash discounts or whatever we can take advantage of, and then pay them as late as possible. So I'm going to click off of this. So that means that these items on the left-hand side, particularly or mainly being the centers of the sales center, that you can also call that accounts receivable, the vendor center, which could be called the expenses center or the money out center ultimately, and the employee center or payroll center. These are the places we go to kind of communicate with our vendors. So we want to communicate on the vendor side this time. So we're going to go into the expenses center, which you might call the vendor center, which has the drop downs on, or the side drops or whatever you want to call them over here. But I typically go into the expenses this way, and then you can see those same tabs are up top here. So now I'm going to close up the hamburger and we'll analyze basically these tabs. Now note, you're not even going to be in here that much if all you do is pay the bills as they become due. You don't have to go check out and track the telephone bill that you paid typically. Although you still, when you enter the bank feeds, do want to enter the vendor name so that you do have the opportunity to sort that. So let me just show you that real quick. If I open up the hamburger, if you go into the transactions tab, then now we're in the bank feeds. So if you're recording things with the bank feeds, the money out is going to be coming through. And when the money out comes through, it might give you information in the description, such as Verizon, for example, for the telephone bill. Now, just because it's in the description doesn't mean it's actually added it to the vendor. So it's possible possibly to record this with just one added piece of information, that being the account, which would be like the telephone expense. However, you might as well enter the Verizon, for example, the telephone company. It's not going to change the impact on the financial statements, but it will allow you to sort your information by who you paid. So if you have to go later and you want to check out all the payments you made for the telephone company, you can easily go into the expenses center and find them. If you do not enter the vendors, you won't be able to do that. So you want to enter the vendors, and then sometimes, even if you're on a cash-based system, you might still be going over here to the expenses and sorting your information by like vendor and just seeing what you paid to each particular vendor. However, if you have bills that you're going to be paying, then you're going to be in here all the time, because every time you make a payment, you're going to be going in here and trying to sort the bills that you have entered so that you can pay them as late as possible. All right, let's go into each of these one by one. Let's go into the expenses. Now, this expenses tab, you can basically think of it as sorting all of the different types of forms that are under the vendor section. So in other words, if I open the hamburger, you've got all of these types of form: expenses, checks, bills, pay bills, purchase orders, and so on and so forth. And I'm going to close this item. So if we go under here, it's sorting those transactions, but just those that are basically under the accounts payable or expenses cycle. So if I hit the drop down here, we've got all transactions. We've got the expenses. So expense forms are the forms like a check form with no check number. It's basically an electronic transfer type of form, and we can see all of the expenses. So the type of form, the number, the pay, the category. Category is the account that it hit. So that's what account is on the balance sheet and the income statement. And then the total. And then we have the bill. Now this would be the most common item, but you might not always go into it here because you have this other tab specifically on the bills. Why are the bills going to be the most common place that you go to when you're in this center? Because the bill form is the form that increases the accounts payable. This is where we have to get into this kind of terminology a little bit. And that is, if you say bill just in normal language or even in accounting terminology, it's somewhat ambiguous in terms of what do you mean? Are you billing the client? Because we could bill the client, we might call that a bill, and then we're going to hopefully get revenue. Or we received a bill from our vendor like the telephone company. So we can use bill interchangeably. However, in QuickBooks and most accounting software, we have to once again get more specific on the terminology, labeling the bill from the side of the table of us purchasing. So a bill to us means that we're the person purchasing from the vendor. And when we bill the client, we might still use that terminology, billing the client. But in QuickBooks, the form will be an invoice. So we invoice the client and we receive the bills. The bill from a form might say invoice on it. Why? Because the person that sent us the bill, telephone company, for example, it's an invoice to them. They're billing the client. They're invoicing the client. we're getting the invoice. To us, it's a bill. So more specifically, even than that, the bill isn't actually the email or the form for QuickBooks. The bill is the data input form. It's the thing that we're entering into the system. So in other words, I could get an actual paper bill or an email bill from the telephone company, which says invoice on it, but it's still going to be a bill to us in essence. However, I might not enter it into the system as a bill, because I might just pay it off with the bank feeds, meaning when I enter it into the system, I paid off the bill form with a check or expense type transaction, just simply decreasing the checking account, possibly with the help and use of the bank feeds. If I enter a bill into the system, that specifically means that I'm increasing accounts payable. That means there's no cash involved. I'm going to increase accounts payable. The other side's going to go to the expense, for example, and then I'm going to pay it at a later date, hopefully trying to pay it as late as possible without getting hit with any penalties. So that's why the sorting of the bills is going to be really important, because that's the whole point of tracking accounts payable and not paying the accounts payable when it becomes due. It's because I want to track it and pay them as late as possible while not incurring a penalty, hopefully while taking advantage of any cash discounts if I can, and while hopefully not annoying or getting angry my vendor as I try to pay them as late as possible. That's the game on the accounts payable. So here's all the bills that have been entered. When you pay the bill, you're going to pay it with a pay bill form, which is basically a type of check form or expense form, but it specifically means the accounts payable will go down. We'll talk about those forms more in detail later. Here is the pay bill form. So notice it says pay bill form, check or credit card. So normally what happens is accounts payable goes up. You can see this on the balance sheet. So accounts payable is going to be a liability. So accounts payable goes up when we enter the bill. If I go into this accounts payable, drilling down on it by just clicking on it, we're in what's called the transaction report. And you can see the bills increase the accounts payable. That's what a bill form does in QuickBooks. The pay bill form decreases the accounts payable. And the other side goes where? Well, it's also called a check form, meaning it's an expense type of form. It decreases the checking account. Why don't they just call it? They might call everything. Some software simply calls all of those forms a check type form. The check type form is the form that decreases the checking account, whether it be a check or an electronic transfer, paying off accounts payable, paying for expenses or fixed asset. And the reason QuickBooks wants to basically allow you to see what's happening with the transaction type. So the fact that it doesn't just say check or expense, but rather bill pay, means this is a specific form that isn't going to be going, the other side of the transaction won't be going to an expense. The other side of the transaction is paying off, in this case, this particular bill. So that means that if you want to know the expense that was actually purchased, you might be able to determine it by who you paid. In other words, if I paid the Verizon company, I would know that was for the telephone. But if I don't know that, I'd have to go into the actual bill, because that's the thing that I actually entered the category, in this case, legal and professional fees. So those dang lawyers I paid, that's the dang lawyer. So I'm going to close that up. Not that that was a good lawyer. That lawyer's on our side. I'm going to go back to the report summary. Not all lawyers are bad, I guess. Let's go back to the first time. Okay, let's not get in. I'm getting traumatized talking about lawyers. All right, let's go back to the first tab. Now, it's possible that you pay off the bill with a credit card, in which case it would be a similar transaction, but instead of decreasing the checking account, you'll be increasing the credit card. So this is one way that we can sort it, and then hit the drop down up top. We have the check forms. Check forms are just like expense forms, except they have a check number for writing checks. These days, a lot of people don't use check forms, because if you're trying to automate everything, you kind of want to remove the check forms. However, many, especially older people, really like check forms still. They like their checkbook. They like, writing the check and mailing out the check. They feel it's tangible. It's not this online cloud kind of thing, right? So if you have to do that, then you're going to enter the physical checks when the person actually writes the check, whether you print it out of the system or not. And you have to check, and you have to basically track the outstanding check using the bank feeds. And then you can look in here and determine the checks, which you might have to do more often than the expense transactions, because you're going to have the added question of, did the check clear or not? Did it clear the bank? Did the other person cash it? But if you want to simplify the process a lot, you're going to try to convince people, let's remove ourselves from the checks. Let's automate onto the electronic transfers, because that's just so much easier to do, and it's becoming more secure. But again, there's still a lot of people out there that you're not going to convince them. Anyways, you got the purchase order. So the purchase order, you will recall, only deals with inventory. So you will only see purchase orders if there's inventory involved, number one, and number two, you are in a position where you can request the inventory without paying for it at the point of requesting, which would be like ordering something from Amazon, but telling them to ship it to you with the bill in it before you pay them. That's not how it typically works for us as we purchase things as a sole proprietor, but as a business, you might be in that position where you could say, ship me this stuff with a bill, I'll pay it when I get it after I check it out. So in that case, you'd enter the purchase order, which doesn't actually have a transaction, meaning it's one form that doesn't actually impact the financial statements, but one that we need to track for internal controls, one which, once we receive the goods, we can use to create the bill, which will record the inventory. We'll talk about purchase order forms in particular in future presentations, but if you use them, this will become important because we have to track the purchase orders even though they don't impact the financial statements. And then we've got the recently paid items. So recent transactions might be easier than sorting it. And then vendor credits. We'll talk about possibly vendor credits in more detail. You obviously don't see them as much. And then we've got credit card payments, and we'll talk about them possibly as well, which have to do with, obviously a credit card type of situation, which you can also integrate bank feeds in as well. So the main ones are these top ones. Now, normally you'd be tracking the bills. So the bills tab is over here. So the bills, you will recall, are the forms that increase the accounts payable, and you'd be over here looking for those outstanding bills. Before I go there, let me go back one more time just to point out the filtering option. So once you've picked, if you picked all the transactions, for example, then you can filter the transactions by status, open, overdue, or paid. This status clearly typically applies to like the bills, right? So if I go to the bills, for example, those are the accounts payable that we haven't yet paid, and then I might want to sort them by status, looking for the open bills, for example, because those are the ones that we haven't yet paid, or possibly by status of the overdue, because they haven't been paid yet. And in some cases, I might want to look for the ones that I already paid, so I can confirm a payment, possibly answering a question from a vendor. And then we've got our date range, so we can change the date range. And then we've got the payee, and then we've got the category, which is going to be the expense category that we posted the item to. Okay, so and that could, by the way, that expense category could be useful a lot if you had all vendors, for example, and you didn't put the vendors in there, like the name Verizon as you entered the bank feeds. Then you might say, well, I'm gonna search it by the category that I posted to, like telephone expense, and you can get around that. But you want to have the vendor in there. If you can, you might as well put that in place. All right, let's go to the bills. We've got the tabs up top on the bills. We've got the for review tab. We've got the unpaid, and then we've got the paid. So let's go to the unpaid. So the unpaid bills are the normal place that we would go, because these are the bills that we have not yet paid. And if we have a lot of transactions, as you would, the larger the company gets, then you're going to enter the bill with the date that you entered the bill. That's the date the expense will be recorded. But you also want the due date, because that's what you need to sort by typically, because that's when you need to pay by in order to not be penalized for late payment. So that's the game. The game here is I enter the bills, I sort them over here, and then I try to pay them as late as possible. The little quirks in the game are, could you get a cash discount if you pay it earlier? Is it worthwhile to do that? And if I pay it later, am I making sure that I still have a good relationship with my vendors? I don't want to pay overdue, even if they don't penalize me, even though that would be good for cash flow, because it will anger our vendors, and that's going to be a problem. So that's the idea of the accounts payable. So we would sort them thusly, and then basically we could check them off and make payments, which would be the bill pay forms from here. So we'll get into that more later, but on the right hand, we could schedule a payment. We've got the mark as paid if it had already been paid for whatever reason. View, edit the bill, duplicate it if we need to, and delete the bill if we needed to delete the bill. We've got our filters, all transactions, all vendors, and then we've got the date filter that we can adjust up top before. We're currently in a year of transactions, which is kind of the default. Show bill payments, how to manage bills, we'll keep that. Then when we pay them, we are over in the paid area, and we get this nice list of the paid bills. Once again, we have the filter, all vendors, or the dates when they were paid. And you could possibly put them into the review if you have kind of a review system. Otherwise, you're going to have the unpaid bills. Once you pay them, they're going to be moved over here to the paid area, and it will record then the transaction. All right, so then we're going to go to the vendors. Let's go to the vendors. Now, this is the other way that we might communicate with the vendors. If you just pay the telephone bill and so on as it happens, you're probably not going to be in here much unless there's a question, like at the end of the year when you do your taxes, about the telephone bill or something, and this might be one place that you go to. But again, if you track the accounts payable, then you might be in communication with the vendors. They might call you and be like, hey, where's my payment on this particular thing, and so on and so forth. So you can see up top, we have the standard kind of filters up top. So we have a purchase order. So I can say, let's sort all of our vendors by the open purchase orders. That would be the ordering of the inventory. So that would be nice. This one has the one open purchase order. If I then go into that vendor, we see the detail within here, and we have our purchase order, which we can then use to create, say, a bill. We'll talk more about that later. Notice when I go back here, I'm not going to use the arrow up top. QuickBooks' whole integration on their website is basically internal. So you shouldn't need to use this back arrow much. You could, but it would be better off to use the internal functionality typically, because that's how it's designed. So I'm going to go back. So there we are. Then I can go to I can clear the filters. Let's clear the filter. Now we have all of our vendors down here again. And now let's go to the overdue items. So I can go to the overdue, and now I'm sorting these overdue items. Notice I'm not sorting by bill, which is overdue. We did that over here or in the expenses. This is sorting by the vendors which have an overdue bill within them. So if I go into this particular vendor, then I can say, okay, let me look at the overdue bill in here. Now, this isn't typically where you would go to pay the bills, because normally you would go into the bills over here and sort all the bills that are overdue and basically pay them. But if you're trying to search like at a particular vendors that have overdue bills, you could go in here. I can remove the filter this way, and then I can go open bills. So these are the ones that are overdue. These are the ones that are open, meaning they just simply haven't been paid yet, and they're not overdue. And then we've got the paid in the last 30 days. So these are the ones that have been paid fairly recently. And there we have that. We can remove the filters here. And then we've got the 1099s. We'll get more into basically 1099s later, but in the United States for income tax reporting, the IRS wants to make sure that, remember, every transaction has someone purchasing something and someone generating revenue. So there's an expense side of the transaction and a revenue side, right, typically, of every transaction. So that means that from the IRS's perspective for income taxes, they have the leverage on the person that is paying to rat out the person that's getting the money, because the IRS wants to know about the person that's getting the money, because it's an income tax and they have to pay taxes on the money they're getting. So if it's an employee, then we have to actually rat out the employee with a W-2 form given to the employee and the government, and we have to withhold from the employee the money according to the W-4 form. If it's not an employee, but the company is large, meaning they're a corporation, then the IRS is like, you don't have to do anything particularly oftentimes then, because we already have our hooks. We know who this guy is. We've got our hooks in this guy because they're large enough they can't be under the radar. But if they're small and you pay them and they're not an employee and they're not incorporated, the IRS is like, that dude might fly under the radar, so we won't make you withhold, but we are going to force you to give us a 1099 to just rat them out, to let us know that they earned some money and we should see that on their tax return. All right, so we'll talk more about that later, possibly as a special area. And then we've got the new vendor. We can create a new vendor, of course, here. And then you've got your fields. You can adjust your fields. All right, and then we have your contractors. Now, when we're thinking about money going out, then there's a little bit of an overlap, right? Because if I pay money going out, usually I'm thinking telephone bill, utility bill, my vendors who I purchase my inventory from, but I also pay money out to employees. Now, of course, employees have gotten so it should be just the same thing, right? I should shake hands with my employee. If there wasn't so much government, intrusion, I would just shake hands with my employee and we would agree to the terms, and then I would pay them just like I would pay any other bill, and it would just be an expense, employee expense. But because there's so much like laws and regulations regarding it, it's got its own field. So that's been broken out into its own area of payroll, which we would have to add on. So it's not really in this center. And then you've got the idea of, again, contractors. So contractors are the people that basically they might not be incorporated. Those are the ones that you might have to issue a 1099 to. And so you might have some different rules and regulations here with regards to 1099s, tracking them, making sure that you pay them so the IRS doesn't get mad at you. And then we've got the mileage. So mileage has to do with one of your expenses being for the automobile, for example. And this is something that, once again, has to do with the United States. The automobile is always going to cause a problem for taxes, which is one of the major reasons many small businesses are tracking their information so they can create the income statement, so they can use that to make the Schedule C or whatever tax return they need to make. Why is the automobile a problem? Well, one, it might have both business and personal use, so it's not easily categorized as business versus personal. That complicates things. And the government has a simplified mileage method versus actual expense method. What we're going to be recorded in QuickBooks is the actual expense, because that's how accounting works. Meaning, when I pay for gas, when I pay for maintenance, I'm going to record it to gas and maintenance expense, or the automobile. But if I use the mileage method, then I'm going to use the number of mileage I drove in order to calculate the expense. So this is a way to basically help you determine the number of miles you drove, to help you with the mileage method and so on. And so I think we have another course or section that talks about this a little bit more in general. That's always something that's going to come up on the taxes is the automobile, and how you're going to deal, what method you're going to use, and it's going to result in most likely a tax adjustment of some kind for the taxes, almost no matter what you do. And then you've got the 1099 filing, which has to do once again with the 1099s to possibly contractors, and how we can actually file the returns like internally, which we might talk about more in depth later. So that's the general overview of the expenses. So the general idea would be the vendor's side of things, the vendor center, is only something that you're going to spend a lot of time in if you have accounts payable typically, and when you deal with 1099s at the end of the year. Otherwise, if you're paying everything as they become due, you're probably just going to be paying things with the transactions tab using the bank feeds, and it'll be pretty clean. You won't be going into the vendor center unless there's going to be something that you need to look up. Like you want to look up the expenses. You want to look at how much you paid for the telephone for budgeting purposes or whatever purposes. So you might need to sort it there. But usually the main thing that you're figuring out in that vendor center is the people you're dealing with in a more complex system where you're tracking accounts payable, where you're tracking purchase orders, and so on.